Welcome to Realty Talk, the show that brings together the country's most authoritative and respected property experts. Follow us on all the socials and subscribe for updates and exclusive offers. Realty Talk is powered by realty.com.au, connecting buyers, sellers and agents differently.
Greetings and welcome to this week's Realty Talk, the longest running and most popular property show in Australia. I'm Bushy Martin from Know How Property Finance, and this week we continue our series of special shows that will open your eyes and ears to the potential property opportunities in the year ahead. Today, in the conclusion of our special two-part series, I continue interviews with the country's leading property commentators to reveal more of the gold from the recently released 2022 Bricks and Mortar Media Property Market Forecast Report. This week, we kick off with national property predictions from the property professor and the chair of the Property Investment Professionals of Australia, Peter Koulizos. We then enjoy complimentary commentary on what's likely to happen across the country from Advisable's Kate Hill. Justin Nickerson of Apollo Auctions then drills down to give us his hands-on take on the Brisbane market, supplemented by Billy Mitchell from Century 21's Platinum's view of Queensland's Sunshine Coast and surrounds. Ben Plohl rounds out the show with his outlook on what's in store for the Sydney market. And if you want to read all of the details from these and a host of other property experts, make sure you grab yourself a copy of the full BMM report by clicking on the link on our homepage at realty.com.au. We've got a mountain of gold to unpack again today, so let's get on with the show. Greetings and welcome. We're now joined by fellow Adelaidean and chair of the Property Investment Professionals of Australia, Peter Koulizos, for his national views on the year that was and the year that will be in property. So welcome back to the show, Peter.
Thank you, Bushy, and Happy New Year to you.
Likewise, mate. Always love hearing your words of wisdom, mate. So we might just kick off by having a look back on last year. And you quite rightly predicted that property markets across the nation were shaping up for a stellar year. So how do you feel that property actually performed against your predictions? And probably more importantly, what varied, if anything, and why?
So very rare that I get it all right, Bushy, but on this particular occasion, I did. So I said that 2021 would be a better year than 2020. And it certainly was, where most capital cities and nationally we've experienced house price increases of over 20%. Yeah. The one thing that hasn't happened as yet is the lowering of demand for office property. And I think it's mainly because generally commercial property leases run for several years. So, if the lease ended in 2021, then I would imagine people have negotiated for shorter terms or less space. And as time goes on and those leases are up for renewal, I'm sure the same thing will happen. We had a presentation by JLL last week, who I picked up a fantastic acronym. It's called FWOW.
FWOW. What does FWOW stand for?
Future Way of Work.
Future Way of Work.
So what they're doing in some of the large commercial buildings is they're providing amenities to encourage people to come to work. Imagine that, Bushy. That would never have happened in our day, mate. No to way. Encourage their workers to come to work rather than work from home. So they're going to use some of their space for gyms. So yeah, you can stay at home and work, but if you come into work, you can also go to the gym either before work or lunchtime, and yoga and meditation and end of trip facilities such as bike racks and showers and stuff like that. So they already know that there will be less demand for office workers to come into the city. Yeah. So unfortunately, they have to use some of the space to attract them. So they're not going to earn any income from the gym or the yoga room or the meditation room, but they have to have that sort of stuff to attract them.
Yeah, it's going to be a really interesting mix in that whole commercial office and retail space in days ahead. And the costs of refurbishing and refitting aren't cheap. So it presents some real challenges. Turning to this year then, Peter, what's your overall view for how markets are likely to perform in 2022?
So I think next year will still be a positive year, and that is property prices will continue to go up, but not at the same rate as they're going up, as they went up in 2021. One reason is there'll be more supply coming on, and we've already seen that in the last several weeks, and even some of the property data companies have come out and stated that there are far more new listings around now than there have been. Even though overall listings might be below the long-term average, there are far more new listings coming on now. I think also banks will probably lift their interest rates and or their assessment rates. So it'll make it harder for people to borrow money, but those people that can borrow money, they will be borrowing less money. So that's going to be putting a cap on property prices. So far as rents are concerned, I think they've skyrocketed this year, and I think they're going to continue to skyrocket next year because they've managed to skyrocket without hundreds of thousands of overseas migrants coming in. So, you know, what do you think is going to happen when they start coming in? And one of the reasons is, Bushy, I'm not going to guess at your age, but people of, say, my era, because the market is so good, we're cashing out. So we're selling our investment properties and being bought by owner-occupiers, generally first-time buyers, which is fantastic. Yep. But then that's less options for renters. I was speaking to one property manager in Adelaide, and he said, and he's got a large rent roll as well. He said his landlords have sold more properties in the last 9 months than in the previous 15 years that he's been in business.
Yeah, that's good. Yeah.
And I'm doing that myself. You know, I'm at an age now where I'm getting closer to retirement and, you know, sell some properties to relieve some of the debt. So I'm not going back into the market, but it's just a great time to cash out.
Yeah, I'm in exactly the same boat as you, Peter, and doing exactly the same as we speak. So great minds think alike there. What are the key drivers then? You've mentioned a couple already, but the key drivers that we should watch out for that you're likely to influence property's direction nationally this year?
Well, it'll be, I mean, I think nationally we've done as much as we can. That is Australians, like even though we had no interstate, overseas migration, property prices went crazy. So it'll be interesting to see what the overseas migration does. Overseas students, they'll go back into the CBD apartments, and those property prices will go back up to where they were, and property rents will go back up to where they were. The companies that build purpose-built student accommodation will be very happy because they've virtually haven't had any income for the last 2 years. But it'll be the overseas migrants that'll be the one to watch. The influx of about 350,000 overseas migrants, about 150,000 students. That's 500,000 extra bodies, Bushy. They've all got to live somewhere, mate. They've all got to live somewhere.
Yeah, it's going to put some massive demand pressure on you. You mentioned the lifting of assessment rates, and there'll be no doubt that APRA will get the banks to look at other macro-prudential measures. And you also sort of touted the potential lift in the cash rate. Do you think that's likely to occur, or is it just...
No, so the Reserve Bank knows much more about lifting cash rates than I do. So my forecast is in 2022, the cash rate won't go up. But doesn't mean banks won't lift their interest rates. Late last year, they increased their fixed interest rates.
Yeah.
So... Yeah. You know, there's obviously a relationship between the cash rate and the bank's interest rate, but they're not 100% correlated.
No, it's spot on. Regionalisation, what's your view on...
That has been very surprising that it's continued. I thought that in 2020, when COVID hit, a lot of people moved to the regional areas to get out of the city, generally renters, and it takes a lot of time and effort and money to sell your house and go buy another house. And then maybe in a year's time, do the same. You know, a lot of transaction costs. But for renters, rather than renewing your lease in the city, you can go get something within commuting distance of the city. Well, it doesn't even have to be commuting distance. You know, I got a classic example. I got 4 kids. One of my kids works for the federal government, and her boss and her team and her workmates are in Canberra. But she's working from Adelaide. And that's not extraordinary. I mean, I've heard of another one where they're working in Adelaide, but work is based in London. I mean, it shouldn't come as a big surprise because for many years, banks included, have been outsourcing their stuff to overseas workers.
Yeah.
But now we have Australians living in Australia, but their work might be based somewhere else.
Yeah, good call. You've already mentioned some concerns around the CBD office retail space. Are there any other important sectors that we should watch out for in 2022, Peter?
Look, for those people that are considering investing in commercial property, because the yields on residential property have dropped, so have commercial property. I mean, I'm amazed that people are buying commercial property on a yield of 3.5% and 4%. I understand why, because they can borrow at 3%. But those interest rates aren't going to stay at 3% forever.
No.
And I mean, Bushy, I'm sure you can remember back in the 90s when commercial property took a really big hit. I mean, that's mainly because interest rates skyrocketed.
Yeah.
But, you know, when I say skyrocketed, that's all relative. Even if interest rates double from 3% to 6%, or they probably, even if they go from 3% to 5% and your yield's 4%, well, where are you going to make it up? You know, one of the reasons people buy commercial property is they're generally positively geared from day one. If you're negatively geared, you know, that, so I'm concerned about the office CBD market. I think co-working will be an area that increases, and suburban co-working spaces.
Yep.
But the big one to watch out for will be industrial property, or nowadays we call it logistics, because we're going to need to store more stuff. So in the 50 years ago, we used to make a lot of stuff and store a lot of stuff in our warehouses. And then we went to just-in-time delivery, where we only had enough in the warehouse for maybe a week's supply. But now we're going to move something to that I call just in case, where, you know, let's have enough in there just in case we have another pandemic or there's another disruption to the supply chain. Let's make sure that we've got enough stuff in our warehouses. So I can see that to be a big growth area, but at the expense of office property and retail property.
Yeah, no, good call. And I love that term, just in case. Are there any other surprising elements that you believe are likely to have a lasting impact on property this year, Peter?
Yeah, look, I thought that people would slowly move back to the cities after moving to regional areas. But last year, regional areas outperformed capital cities, which very rarely happens.
Yeah.
And, you know, if you've got a family and you put the kids in school and your work might be based in the city, so work's not a problem, or you may have found work in their regional area, well, there's no reason to shift, is there? I mean, the cost of living is much cheaper out there. And if you've gone to lifestyle locations like coastal locations, I mean, the day-to-day is pretty good. When you come home from work, you can go for a surf, go for a swim, or if maybe you've done a tree change, you can go up into the hills. So it'll be interesting to see how regional centres within commuting distance of the cities perform this year.
Yeah, I agree. I think the underpinning thing there is how good the internet technology is, because if the infrastructure is there and they can support very easily the work from home exercise, then those areas will do well. Those that don't have that level of fast internet support will probably struggle.
Yeah, I agree. So,
no, awesome work, mate. Well, we always love your insights, Peter, and we really want to thank you again for your time on the show today.
My pleasure. Thank you.
Thanks, mate. Well, there's more evidence that property is likely to continue to do well across the country in the year ahead, albeit with more sobering variable growth resulting from increased supply and reduced demand. And if you want to grab yourself a full copy of Peter's forecast, along with other industry leaders' predictions on what's likely to happen with property this year, grab yourself a copy of the Bricks and Mortar Media 2022 Property Market Forecast Report on the realty.com.au homepage. And if you're looking for independent and transparent property advice to formulate your elite property team, make sure you engage a Property Investment Professionals of Australia or PIPA member that you can find at www.pipa.asn.au. Stay with us for more here on Realty Talk.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
Greetings and welcome. Now, to provide us with an alternative national view on the upcoming year in property across the country, accomplished property investment advisor and buyer's agent Kate Hill from Adviseable now joins us. So welcome to Realty Talk, Kate.
Hello, very happy to be with you.
Yeah, really looking forward to your insights on the year ahead. So let's get stuck straight into that. What's your overall view about how markets are likely to perform in 2022?
Well, I have to be honest with you. I'm not a big one for making predictions, but I think my feeling will be that things will quieten down a little bit. I think there'll be sustained growth on some level in many markets. I'm trying not to be too vague here, but it can't. In many markets, has been. So look, I think the general consensus is that, you know, it was already slowing down towards the end of 2021.
Yeah.
It will continue to slow. It can't, like I say, it can't be sustainable on that same level, but it will continue to grow. I think there is still a lot of uncertainty around in terms of what new, COVID strains might come across. Can you travel? Can't you travel? Should you travel? So I think people do still have money available because they're not traveling. There's certain things they're hesitating on doing. A lot of investors have money to spend because they have equity in their homes, but it is still a watch and wait. Yeah. Trying to give you, sorry, I don't mean that to be vague, but it's still a watch and wait. It's watch and see.
Yeah, a lot of dynamics, so it's very hard to read the tea leaves, that's for sure. What are some of the key drivers that you believe that we need to watch out for that you think are likely to influence property markets' direction then, Kate?
I think a big one will be listings, the number of listings that are available. It's, very, very basic supply and demand ratios. So obviously the past 18 months, well, let's say the year from November 2020 to the end of 2021, we certainly had a lot of demand and very little quality supply. Yeah. And until that changes, we are starting to see that change, certainly towards the end back in December 2021, we did start to see that change a little bit. I think that's natural as Christmas approaches and people everyone's exhausted. Let's just hold fire. But there are still listings out there. So the frenzy sort of died down a little bit. So I think that there will perhaps be a little bit more confidence in the market from people selling and upgrading. Yeah. There will be more investors around. They were starting to come back more strongly towards the end of 2021. So listings will play a big factor in that. Also, the number of migrants, I'm very keen to see what's happening there. We need them. The government needs them. We need them for the economy. We're not letting them in. Yeah. That needs to change at some point, and I think it will do. They will obviously start that slowly, as we were already seeing with students starting to come back. They will need to start that slowly, but I think there will be an onslaught, well, certainly in the queue to get in, because of our stability, perceived stability anyway from the outside, and I think is genuine stability as well, observing it from the inside. Yeah. But just the sheer numbers and that demand from those people coming in from the outside, I don't just obviously mean interstate migration, so the UK, Asia, etc. So they will all want property, and quite frankly, I don't know where they're all going to live. I'm seeing a big, almost a rental crisis ahead, because vacancy rates are already at the lowest levels in decades in many, many areas. Yeah. So, and that's us contained within Australia. So where all those people are going to live, I don't know. And if APRA make changes to investor lending, they're going to deepen a crisis that is already brewing. We'll see what happens there.
Yeah, there's a lot of signalling in the media around it, whether they follow through, and the signalling may actually just be enough to have the impact that they're looking to dampen the demand side, but some challenging times ahead there. So what are some of the important sectors that we should watch out for in 2022 then, Kate?
Happens there. And say the same sectors that I've always been watching out for, which really is your middle to outer city ring, your very strong regional centres. I think there's been I flagged up danger signs on my shameless flag YouTube channel earlier on this year, because so many areas have done well, so many suburbs have done well in terms of value growth in the past 12 months, that there could be a bit of a danger for people to perceive that, well, buying anywhere, you'll do okay. I don't think that's the case. I don't think that's ever been the case. You still need to watch for those really basic investment fundamentals of population growth, economic diversity, or economic strength, I should say, and industry diversity. You still need to make sure that those things are in place before you buy property to invest in, obviously. Yeah. So all of those kind of your strong regional centres, middle to outer city ring, really, that's will continue to do well. But I'm not sure that there will be that sustained growth across every single market almost in Australia that there has been, which has also been a very unusual occurrence. That doesn't normally happen, that the same thing happens everywhere, right? It's markets within markets, and I think we'll probably see a bit of a return to that.
Yeah.
And perhaps a bit more movement as our internal borders are opening more. See what WA does. And just again, watch and wait, really.
Yeah. No, but you've hit it on the head. The things don't change. The basic criteria are always going to be there. We can sort of get ourselves distracted by the media noise that likes to create this boom and bust type of psychology. But end of the day, it's diversity, employment, jobs, infrastructure. They are the key drivers. I love that. So what are some of the surprising elements that you believe may have a lasting impact on property this year, Kate?
That will have a lasting impact?
Yeah.
Well, I'm not sure, really. Well, if it's a surprise, I'm not really sure what's going to happen. But I think just the rate at which that growth did happen in 2021, if I can say that, sort of let's say from the end of 20 to the end of 21, we went from a holding pattern when COVID first hit for the first 6 months to then things going bang, utterly disco crazy. And I don't think anybody expected that. I think we thought with the number of listings and the demand still being relatively okay, that there would be sustained growth. Things that certainly weren't going to crash the way they were being spruiked that things would crash. That certainly didn't happen. So it was just the sheer level of it not happening, the complete other end of the spectrum happening. I think that took everybody by surprise. 20+% growth in many of our centres, both regional and capital cities. That took people by surprise. And then the reluctance of people to sell, I think that hesitancy, which is understandable, perhaps not surprising. So I think we will just see the repeat of that, but not on the same scale, right?
Yeah.
That would be, if it happens again on the same scale, you can call me next year. I will be surprised. We can call it a surprise. That surprised me. Yeah.
Yeah.
Level. Yeah.
Totally agree. I think we've seen the compressed spring is bounced out to its limits, and water will find its level.
Yeah. And look, and having said that, again, bringing economics back into it, we are now experiencing a labour shortage, right? So everywhere you look, people are hiring, are struggling to find good people. So I think there will be some wage growth as we come up. People will be able to afford the higher prices that we're having to pay for property now. But like I say, it can't go on that same sustained level unless they let in 200,000 migrants. by the end of March, which I think is unlikely.
Yeah, agreed. But that second wave of migration will certainly increase demand as well. Awesome thoughts. Well, I really want to thank you for sharing those insights with us today, Kate, and thanks again for your time on the show today.
Anytime. Loved it.
Thank you, Kate. It appears that we're returning to more normal variable property market conditions around the country this year, where buying the best property you can and holding it for as long as you can will continue to provide the best results over the long term. Now, if you want to grab yourself a full copy of Kate's forecast, along with other industry leaders' predictions on what's likely to happen with property this year, grab yourself a copy of the Bricks and Mortar Media 2022 Property Market Forecast Report on the realty.com.au homepage. You're watching Realty Talk, your trusted voice for all things property.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Welcome back. Well, we now turn our focus to the Brisbane market and to dive into the year that was and the year that will be for property around the Sunshine State's capital. We're joined by leading auctioneer Justin Nickerson of Apollo Auctions. So welcome to Realty Talk, Justin.
Thanks for having me, mate.
Now, looking forward to jumping into what I think is going to be an interesting year in Brisbane. But before we do that, let's have a look at last year's Bricks and Mortar forecast, where you sort of indicated that Brisbane's strong finish to the year was set to continue. And you made special note of the sweet spot of the outer inner ring suburbs that are sort of 3 to 5 k's from the CBD. And you made note of the surprising move to people moving to buying homes sight unseen after FaceTime tours became mainstream. So how do you feel that property did actually perform against your predictions for 2021, and what, if anything, varied and why?
Yeah, look, I think it definitely continued on the same manner of what we sort of suggested, but to a much different level to what we had anticipated. It was an incredible year in so many different facets, you know, in the way that the market grew and accelerated was something that we just sort of really couldn't comprehend at the end of 2020 when it sort of looked like it was happening, but it definitely kicked into another gear. And that rise of interstate buyers, interstate migration was incredibly big as well. It became almost unusual in the end to call auctions without having a phone bidder or an online bidder present. Just such was the strength of that interstate interest. And people buying homes with FaceTime tours, Zoom tours, sight unseen, rather than being a once-off occurrence, became really a mainstream way of transacting.
Yeah, no, very interesting change in tide. But let's turn to the future now, Justin. I'd love to get your overall view about how the Brisbane market's likely to perform in 2022.
Yeah, look, I think it's going to continue on much in the same as what it sort of has. There seems no reason that the current conditions really will drop off. The supply looks like it's going to remain limited, and the demand is still going to remain very high. So I think we'll see more of the same. We have seen sellers' expectations in the latter part of 2021 becoming a slight barrier. In some cases where, an expectation around a record price or an incredible price becomes, the expected or the norm rather than an incredible result. And that could be a barrier to potentially more properties transacting, but all the factors there to continue. It's going to continue to be a really buoyant year, I do think.
Yeah, good stuff. Well, let's drill into some of the key drivers that you believe we need to watch out for that are likely to influence Brisbane's direction.
Well, I think it's the continued interstate migration will be one. It'll be a very interesting study, I think, to see whether there's sort of two schools of thought. One is that, borders open, so that interstate migration will continue to kick up. The second school of thought is that people were more likely to want to move when they were oppressed, for lack of a better word. They couldn't travel to see family. They couldn't go down to a local coffee shop to get a coffee. That was really sparking those people who really wanted to get out. So that'll be an interesting thing to monitor. The ongoing effect of COVID, living with that as the new normal will be interesting. And then also, the potential of an election is always one that looms over the market landscape as well. Does that affect people's confidence? Does that create some hesitation? I think if COVID has taught us anything, it's been that, you know, our market is pretty resilient. Even things that we thought would stop our market dead in its tracks like COVID has actually done the opposite. So an election in theory shouldn't really hold anyone back from buying or selling. But historically, we know people are more cautious when there's elections around the corner. So I think all those factors, and then there's probably a whole lot of factors that, you know, we can't even think of 2 years ago or 2.5 years ago. You know, we'd never talked about social distancing or quarantine or, you know, hygiene or any of those things. So, yeah, there's probably a whole lot of things that the Labor night beneath the surface that may well affect it.
Yeah, no, it's certainly a dynamic space. Are there any important sectors that we need to be watching out for in 2022 as you see in the Brisbane locale?
Look, I think the apartment market will be one that bears monitoring. You know, the apartment market in Brisbane hasn't been a great one for the last decade or so. I think now with maybe, you know, a bit of an uptick in the market, maybe less construction as to what has been happening, you know, that may stimulate that market somewhat. So that's going to be one that probably bears a bit of monitoring. And also any sort of new product that's coming out to the market. We've known noticed a real change in people traditionally were looking for properties they could renovate, put their heart and soul into. The most popular auctions we've done across the last few months, particularly in Brisbane, have been finished products that is probably a recognition that people actually don't want to get in and renovate. They understand that costs of renovation have blown out, timeframes to renovate have blown out as well. They'd rather buy a finished product. So something that's new and coming to the market would probably be an interesting sector to keep an eye on as well.
Yeah, no, okay. And are there any other sort of wild card or surprising elements that you believe may have a lasting impact on the Brisbane market?
Look, not really, not outside those ones I think we've named. I think, you know, I said if I knew the answer to that one, I'd be in a lot more important job than the one I'm in. And I think there's a lot of factors that just sort of sit there and aren't recognised until they become something that's right in front of your eyes. I think outside of the election and the ongoing, you know, health and economic challenges that COVID faces, does interstate migration settle down? What happens with Aussie expats? Have all of them come home now? Is there any international migration that occurs? All those sorts of things are still things that I think we're only at sort of chapter 1 or chapter 2 of those books. So they're going to be long books to read. But they're going to be pretty interesting tales by the end, I think.
They are. I guess the one thing that I wouldn't mind your comments on, Justin, I would have thought, given what's happened with COVID, et cetera, there's probably likely to be a lot more in-room auctions and probably auctions now, something happening 7 days a week rather than just on weekends. Is that a trend you're seeing in Brisbane?
Yeah, look, it was always a bit of a myth. People would always ask me, the two questions I always got as being an auctioneer. One was, do you talk fast? And the answer is yes, but not as fast as cattle auctioneers. The second one is people always say to me, what do you do during the week? Where they sort of think, I think you sit at home and you watch Ellen and Days of Our Lives all week, and then they roll you out on a Saturday and a Sunday, and then you go back in your box. It's very much changed the landscape this year. We're doing auctions every day of the week and throughout the day. We sold the property 2 weeks ago for $12 million under the hammer. There was 1 o'clock on a Wednesday with a large crowd there. So the day of the week and the time of the day has definitely become less hyper-focused on Saturdays. And the second thing to that is the venue of the auction has changed as well. It's all well and good being on site, but if you have restrictions that stop you from being on site, then all of a sudden you can't do it there, you know, unfavorable weather conditions. So a number of in-room auctions have taken place and a number of virtual auctions as well. And that's something that will continue to go on. The tyranny of distance is no longer one that sort of bounds anyone. You know, you can have bidders from anywhere bidding, and you can have an auctioneer that's anywhere running the auction. You just need to be able to handle it through an online platform. So both of those things, I think, will be things that just continue to become mainstream as we go along. Yeah,
no, very interesting, mate. Look, really appreciate you sharing those hands-on insights, Justin, and thanks for your time on the show today.
Pleasure. Thanks for having me. All the best.
Thanks, mate. Well, it's no great surprise that Justin and other industry leaders continue to predict that Brisbane is actually very well poised to become the best performing capital city next year as the exodus to lifestyle continues. And if you want to get all of the details of the 2022 Bricks and Mortar Media Property Market Forecast Report, just jump on the homepage link at realty.com.au. Stay with us for more here on Realty Talk.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know-how has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
Hi and welcome back. Now, Southeast Queensland property has been performing very well in recent times as a result of the exodus to lifestyle, with Brisbane and surrounds now recording the fastest pace of growth around the country, according to latest CoreLogic data. So to get a hands-on view of where property is heading in the area by a top-selling agent on the ground in and around the Sunshine Coast, we're joined by Billy Mitchell, Director of Century 21 Platinum Agents in Gympie and Koulizos Coast. So welcome to the show, Billy.
Good afternoon, Bushy. Thanks for having me along.
Yeah, no, great to have a chat in what is proving to be a red-hot part of the world in property at the moment, mate. So, but before we sort of look into the future, how did property perform against your predicted view in 2021?
Oh, mate, I didn't think it would be as good as what it was in 2021, although my predictions were for further growth again. Yeah, I mean, and even if we rewind back pre-COVID, I thought, especially the Gympie and Greater region, we're quite dominant in, was always heading in the right direction. But where it took off from March 2020 through to the end of 2021 has just been phenomenal. So I would say it's well ahead of my predictions and most of other people's, mate, I'd imagine.
Yeah, totally agree. So moving to the future then and looking ahead for 2022, what's your overall view about how markets are likely to perform in your area, mate?
Yeah, I think the markets will still continue to grow, Bushy. That's what I think. I think there'll be another maybe 8 to 10% growth in 2022, and I think we can say that quite confidently, especially in my area. The rental demand's still very high. We've got a lot of infrastructure happening around southeast Queensland. So and obviously with what's happening in the world, we're quite a spot that everyone's sort of got a big circle around, mate. So I hopefully that'll continue and it's still a positive market in 2022.
Yeah, totally agree. So from where you sit then, sort of hands-on in what's happening on the ground, what are some of the key drivers that you think we need to watch out for that are going to influence your market's direction this year?
Yeah, I think the rental market's the number one indicator for us, making sure that the demand's still there. I mean, on average at the moment, we're getting 25 to 35 applications every property that hits the market within the first couple of days of that property hitting the market. So,
wow.
So that I think is the key one to look out for in our area is to make sure the rental market's still strong. And I think the property prices will hold up as well, as long as a few other things. But if you would ask me to one, that'd be one I'd be looking out for.
Yeah, okay. And are there any other important sectors that we need to keep an eye on in the year ahead?
Oh, I think interest rates will play a big part in that as well. I don't think they can get too far ahead of us though for 2022 or 2023. So, I think that obviously employment, which is the best it's ever been. Sorry, mate, I may have lost you there. There we go. No. The employment, which is really good at the moment. There's everybody screaming out for great employees, especially in my area at the moment. So I think those few things, mate. But all in all, I think it's going to be a pretty good year.
Yeah, totally agree. Are there any sort of wild card or surprising elements that might come out of the woodwork that you think will have an impact on the market locally?
I don't think so. I mean, we never know. It's really uncertain times at the moment with COVID. So we'll just have to see how now that the borders are opening up and how the market reacts to that. I still think we're going to be a place that everyone's got their circle around us. But just to see how it's handled and all those sort of things and what sort of a reaction we get when the borders do open up and we're living with this virus, So whether that's a surprise, mate, I don't think so anymore. It's probably more part of the normal than a surprise, but that would be one thing that I'd be interested to see how it all plays out and see how we do business in 2022. That might be a lot different to how we did it in the last couple of years. Yep. Yeah,
no, good call. Well, look, mate, I really appreciate you taking time out of your busy day to give us your first-hand projections, Billy, and really want to thank you for coming on the show today.
No worries, Bushy. Thank you. All the best.
Okay, so if you want to grab yourself a full copy of Billy's forecast, along with other industry leaders' predictions on what's likely to happen with property right across the country this year so that you can make better informed decisions, grab yourself a copy of the Bricks and Mortar Media 2022 Property Market Forecast Report, which you can get on realty.com.au homepage. Keep watching for more here on Realty Talk.
Property depreciation is the natural wear and tear of a building and its assets. Property investors can claim depreciation as a tax deduction each financial year. Depreciation is a non-cash deduction. This means you don't need to spend any money in order to claim it. On average, BMT tax depreciation fined residential investors almost $9,000 in first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Hi and welcome. Now, with Sydney being the largest and the second strongest housing market last year, with prices climbing over 25%, we're now joined by leading local buyers agent Ben Plohl, the founder and principal of BFP Property Buyers, to give us his hands-on account of the Sydney market. So welcome to Realty Talk, Ben.
Yeah, g'day, Bushy.
Great to have you on, mate. And it's certainly been a very active time in property generally. So having a bit of a reflection on last year and looking at your forecast at that stage, you sort of predicted that the Sydney strong buyer demand for the Hills District was set to continue, and you felt that expat activity across the city was likely to keep surging. So how do you feel property actually performed against your predictions last year, and what varied, if anything, and why, as you see it?
Yeah, so I think last year we were forecasting that it would remain a very strong seller's market, which I think played out, quite nicely here in the Hills District, but broadly, I think across multiple markets in the country. So yeah, strong seller's market. I think the demand that we were expecting was probably, I think it sort of shocked everyone with the level of unprecedented demand that we've seen in the markets. That was still in line with what we were expecting, but I think it even pushed above what everyone's thoughts were. But I think being that strong sellers market was, definitely it played out nicely with all-time stock shortages or those supply levels being very tight.
Yeah, it'd be interesting to see how that pounds out in the year ahead. So let's sort of turning to the future now, Ben. What's your overall view about how the Sydney market's likely to perform this year?
Yeah, look, I think the sellers market's going to remain, at least for the first half of the year. I think the demand levels will taper off, but it's really going to depend on a couple of real key factors, being the trajectory of interest rates, what happens with overseas migrants, whether they return to the country, because that's going to, I think, have a massive impact on the direction of the market.
Yeah, absolutely agree. Well, it's sort of, you've touched on that. Are there any other key drivers that you think we need to watch out for that will influence Sydney's direction?
Look, I think, key drivers will be the trajectory of interest rates, what happens with overseas migrants, and I guess overall just confidence. Where is consumer sentiment going to be, this year? What happens, with this evolving pandemic? What's that going to mean with people around job security, etc.? I think that's going to play a significant part. Look, hopefully, I think the way we left off at the back end of last year, things are moving in a positive direction. I think confidence is returning. The economy is becoming quite buoyant. I think leading into this year, let's hopefully see that continue. But I think that's something that's going to be on the back of everyone's mind.
Yeah, no, well read. So in amongst all that, what are some of the sort of important sectors that you think we need to be watching out for in 2022?
Yeah, so I think the back end of last year, we saw a significant amount of baby boomers really starting to make some change in the direction of their housing makeup. So we've seen, especially up here in the Hills and a few other broader parts of Sydney that we operate in, a lot of baby boomers wanting to sell out of the large family home and move or downsize into smaller accommodation. And I think that's going to continue into this year with obviously with prices still, or vendor expectations still quite high. People are thinking, well, perhaps now is the right time to sell out of that larger home and get into something smaller for retirement.
Yeah, yep. No, it'll be interesting to see how that pans out. And sort of finally, then, are there any sort of wild card or surprising elements that you believe may have a lasting impact on the local Sydney market?
Yeah, Bushy, I think another key trait that we saw last year that I think will continue on is the old bank of mum and dad. So I think with the market rising so significantly, I think lots of first home buyers or young buyers have had that issue of coming up with a deposit. And that's something that we saw quite often, even with clients that we've worked with. Young Sydney buyers have probably got the income levels to support, from a borrowing capacity, but just coming up with that initial deposit was always a challenge. So I think, leveraging off or getting support from mum and dad, I think that trend is going to continue.
Yeah, no, well picked. Well, look, really appreciate you taking some time out of your busy day to share your grassroots insights, Ben, and thanks for your time on the show today.
Yeah, thanks, Bushy.
Thanks, Ben. Well, it appears that the Sydney market is perhaps set to moderate a bit this year with the boomers and the bank of mum and dad supporting ongoing growth and a little bit of buyer fatigue starting to creep in. But as Ben has well said, there's still plenty of opportunity. And if you want to read Ben's full forecast, along with those of leading property predictions from industry professionals right across the country, then grab yourself a copy of the full 2022 BMM Property Market Forecast Report, which you can find on our homepage link at realty.com.au. You're watching Realty Talk, your trusted voice for property. Welcome back. Well, I hope you've enjoyed part 2 of our deep dive into this year's 2022 BMM Property Market Forecast Report. Before we sign off, let me summarise some more key takeaways on this year's predictions from today's industry leaders. Property prices are expected to moderate this year, with work from home set to be an ongoing game changer. Property markets are set to return to out-of-sync market cycles, and until listing numbers go up, prices are likely to continue to rise. The Brisbane auction market continues in record territory, with interstate migration looming as a key driver. Buyer demand for lifestyle markets is not likely to slow down anytime soon, with property price pressure to continue in areas like the Sunshine Coast and surrounds. Meanwhile, the Sydney market is set to moderate due to buyer fatigue, but opportunities are still going to exist. So if you're a real estate professional or a property investor looking to make well-informed decisions in the year ahead, you can't afford to miss all of the details from today's guests and other industry leaders in Brick and Mortar Media's 2022 BMM Property Market Forecast Report that you can find on our homepage at realty.com.au. Well, that brings us to the end of another action-packed show. Another big thanks to our special guests, Peter Koulizos, Kate Hill, Justin Nickerson, Billy Mitchell and Ben Plohl for sharing their insights. And to make sure that you don't miss an episode of Australia's most informative property show, subscribe to Really Talk on Apple Podcasts, Google Podcasts, Spotify, YouTube, or wherever you listen. And make sure that you sign up on the realty.com.au homepage to get every episode in your inbox every week. And while you're there, make sure that you check out one of Australia's most extensive range of properties for sale from over 7,000 agents nationally. Thanks again to realty.com.au and BMT Tax Depreciation for their ongoing support. I'm Bushy Martin from Know How Property Finance, and I look forward to seeing you again next week.
Miss something in this week's show or want to catch up on past shows? Do it anytime at realty.com.au, where we connect buyers, sellers and agents differently.